Are you guys looking for a model that repeats itself almost every single day? Are you looking for a model that is so profitable it will make you unlimited amounts of money? Are you looking for a model that is so simple that a monkey could learn how to trade it? Well, you stumbled upon the right video. In this one video alone, I'm going to show you exactly how I make money every single day in the New York AM session. Stay with me, this is going to be interesting. Oh, and before we start, take out your pen, take out your notepad, and start taking notes. This model is based on liquidity, structure, and CRT. Yes, CRT. I know a lot of you guys don't like that word, but don't worry, I'm going to show you exactly how it works. This is what I call the 9 a.m. CR model, and it's going to change your life. Step 1, we're going to need to draw the 8 a.m. or the 9 a.m. high and low. Where? On the 1 hour time frame. All right, so we're gonna take a look at an entire week together and I'll show you exactly how it works. So right over here, we have every single day divided by these vertical lines right over here. Okay, this is the Monday, this is the Tuesday, this is the Wednesday, this is the Thursday, and this is the Friday. Let's go ahead and hop onto that Monday and see exactly what happened. Like we said, we draw the 8 a.m. high and low. We got the 8 a.m. lows, and we've got the 8 a.m. highs. Now the next step would be to locate an hourly or 4-hour key level. If we have a key level on the hourly time frame, there's no need to jump to the 4-hour. However, it's always good to refer to that 4-hour to see if that hourly key level is a refined 4-hour key level. So in this time frame, we have this hourly swing low right over here, which we can call our key level. Let's just mark that out. We also notice that price is inside of an hourly fair value gap right over here, all right? And it's being respected with the bodies. You can see wicks doing the damage, but the body's holding up that gap. We can ignore that and use this hourly key level right here. On the 4-hour time frame, if we take a look at that, we'll be able to see that there's probably a refined key level at that point. We have this hourly fair value gap, 4-hour fair value gap right over here. Within that 4-hour fair value gap, we have this 1-hour low. So we're gonna remove the 4-hour gap and only use that 1-hour low. Now let's rewind the time here so that we don't cheat ourselves. At the end of that 8 a.m. hour, you draw out the high and low. This is the 8 a.m. 1-hour candle. Now we're going to drop down to a 15-minute time frame. All right, on the 15-minute time frame here, we're gonna wait for a sweep of the lows to then target the highs. Yes, guys, it's that simple, okay? So the idea is basically going to look something like this. Price comes down beneath the 8 a.m. low, then tapping into the key level and then reversing, pushing prices to the 8 a.m. highs, and then potentially some other liquidity like right over here. All right, let's actually see what happens here. Let's advance the price. We end up hitting those highs, but we're bullish, right? So we're not going to get short, we're actually gonna get long. We need to use this key level to actually get long. All right, so right over here, what do you notice on a 15-minute time frame? We have this low right over here that was just tapped into on the 15-minute time frame. What do you notice about this specific candle? The high has never been hit. That means price is likely to expand back up to these highs, pushing through the 8 a.m. highs and ultimately pushing to this liquidity point right over here, okay? Now we're going to drop down to the 1-minute time frame because this is where you're actually gonna get your entries. On the 1-minute time frame, after price sweeps the 8 a.m. lows and taps into the key level being right over here, we're looking for an IFVG and an order block formation. Not only the IFVG, not only the order block, but both, all right? So over here, we notice we have this 1-minute IFVG forming as soon as price closes above that candle with the 938 candle. This is after market open. We also realize that the order block formed right over here as well. A bit later on, after this candle, 942 candle, closed above this black candle right over here, which is the last down close candle in the range. All right, the validation of both the IFVG right over here and the order block is the entry long. Put your stop loss to those swing lows. And ultimately in this situation, we are not targeting the 8 a.m. highs. We're actually going to target the 15-minute CRT highs, which gives us around a 2-hour trade. That being said, since we do have a lot of liquidity above as well, we can target buy side liquidity, which is right over here. And that gives you a decent 2.93, about a 3-hour trade. This is 165 points on the Nasdaq. Okay, we're going to show you exactly what plays out here. We have the 15-minute CRT high. We have the 8 a.m. highs. Let's see what plays out. All right, and I'll tell you exactly where you should be taking profit as well. So we have the midpoint of this entire range being right over here. Ideally, you want to be taking out profits right there. Just a bit, not too much. And then push prices to these 15-minute CRT highs and take profits there. Let's see what plays out. Price then taps into those 15-minute CRT highs. The idea remains simple. You want to move stops to break even at that point. Then we're targeting the final buy side liquidity, which is right over there. Let's see what happens. So very close to that break even. Let's see if we actually get stopped out or if price wants to run with us. So we end up getting stopped out at break even after TP1 and TP2. That's absolutely fine. Why? Because we still made money on the day. And that's exactly how you would have probably caught about 100 points on the Nasdaq on the Monday. Now let's move on to the Tuesday. I'm going to show you this model forms almost every single day, guys. And this is one of the most recent weeks. Go back test it yourself. All right, let's go on to the Tuesday now. On Tuesday, we're doing the same thing. We draw the 8 a.m. high and low or the 9 a.m. high and low. In this example, we're going to take the 8 a.m. high and low. We got the 8 a.m. lows and we got the 8 a.m. highs. Okay. What do you notice with this setup here? The 9 a.m. candle sweeps the 8 a.m. candlestick low, and then we close within the 8 a.m. range, and then the 10 a.m. candle, the third candle in the range, actually expands to that 8 a.m. high. All right. So now we can easily spot a key level beneath us right over here, hourly swing low, similar to the previous day, right? So we got the key level right there. Now you can refine this on a 4-hour time frame. We're not going to need to jump to that 4-hour because we see this opening week gap right here, which is a 4-hour daily and weekly key level in that case. And then we'll refine that down to this hourly key level right over here, which is that swing low. What makes this a swing low? We have a higher low to the left and a higher low to the right. Now we're going to drop down to a 15-minute time frame and show you exactly where the entry would have been. So on the 15-minute time frame right over here, we're looking for a 15-minute CRT. So we did get that 15-minute CRT. Where is that? Right over here. We sweep this candlestick low. If this green candle never tapped into this candlestick low, we would not be looking for a trade. Okay, you can refine it and look for a trade on the 5-minute. So a 5-minute CRT. However, the probabilities will drop as well. Okay, so stick with that 15-minute time frame if you're a beginner. Take this down in your notes. 15-minute CRT low being swept. We not only need to tap into this key level, we also need to sweep the 15-minute candlestick low. What do you recognize about this pattern? Similar to the 9 a.m. candle being swept with that hourly chart, we see this 15-minute candlestick high still available to us. Price closes within this range right over here, and then we start to expand to the upside as price never targeted that level. Dropping down to the 1-minute time frame to look for the actual entry. Where would it have possibly been? Remember, we're looking for an FVG and an order block to enter long. Why? Because the key level and the 8 a.m. range low have already been hit. All right. And bias is extremely important. We're tapping into the new week opening gap. Bias at this point turns bullish. We're also sweeping Monday's lows. Keep that in mind, which is right over here. When we're beneath Monday's lows on a Tuesday, tapping into a weekly or daily key level, we're likely to expand the opposite direction, and that's exactly what happened. Now let's look for the actual entry. Price sweeps those 15-minute lows. We finally create an IFVG right over here, but that is not the entry just yet. Remember before, we're waiting for the order block as well, which forms as soon as price closes above the last bearish candle in the range, right over here. 943 candle, we close above that with the 945 candle, sweeping the 15-minute low, tapping into the key level, and also sweeping these 8 a.m. lows as well. Perfect. That is the entry long right over here. Stop loss, going to the swing low, always the swing low, which is right over here. And then final take profits. In this scenario, where's liquidity? Where's buy side liquidity? Well, we had a bunch of highs over here, more highs over here, and more highs over here. Could you have targeted all of these highs? Sure. But in this case, we have a 3.44R trade. You can take that trade. Obviously, this buy side liquidity right over here is very, very prominent to us. Why do I say that? Well, these are all relative equal highs. If you actually take a look here, we got let me pull out this tool here. We got this high right here and these highs right here, relative equal highs. Then we have this high here, relative equal highs. So this is the final buy side liquidity target, okay? Let's go ahead and remove all those drawings and target that liquidity. All right, now let's take a look at where we would have taken partials. Okay, so the midpoint, since the range is big and we are entering very low within that range, unlike the first example, our first take profit is going to be the midpoint of this entire range. All right, so we got the range high, the range low. The midpoint of that range being right over here would have been TP1. Okay, so TP1 at this black line here. Let's mark this out, TP1. And then the next TP would be the midpoint of that 8 a.m. range, which is actually right over here. All right, so this is TP2 right over here. Let's mark this out. And next we have another take profit, obviously at the 8 a.m. range high, which is right over here. So we're gonna mark that out as well. This is important to note. 8 a.m. range high, TP as well. And then of course, final TP being the buy side liquidity right over here. What do you notice? Price respects the IFVG, respects the order block, and immediately starts to expand to the upside. This was a 275.5 point move. All right, this exact move was called out inside of TSR Premium live on stream by me. I executed this live, called it out live, and well over 100 members caught it all with me. We collected a cumulative 275 points on the Nasdaq on the Tuesday after catching over 100 points on the Monday together inside of TSR Premium. If you want to join TSR Premium, click the link in the description down below. You get 7 days for absolutely free. All right, so if you want to catch these same trades with me, click the link below, you get the free trial. All right, now let's move on to the next day. I'm pretty sure right now you're probably amazed of how simple this strategy is, how easy it is to spot, and just how often it actually forms. All right, let's move on to the Tuesday and see if there was an actual trade on that day. Let's remove all of this and move on to the Wednesday, not the Tuesday. Jumping back to this hourly time frame, we're going on to the Wednesday here, and we're going to draw the 8 a.m. high and low and the 9 a.m. high and low. In this scenario, we're using the 8 a.m. high and low. What do you notice here? Same exact setup. 9 a.m. candle sweeps the 8 a.m. lows and then targets the 8 a.m. highs. This is where we're looking for our entry. What else do you notice? We have an hourly fair value gap right over here. Yes, the wick did the damage. However, the body tells the story. We closed above that hourly fair value gap and respected it. That means it's a valid key level. Now, the only way we know this is if we drop down to the lower time frames and validate price and structure. Let's drop down to that 15-minute and see exactly what happened on the Wednesday. Remember, on the 15-minute time frame, we're looking for the 15-minute CRT. That means not only do we need a tap into the key level, not only do we need to sweep the 8 a.m. lows, but we also need to sweep a 15-minute CRT low. Right over here, we get that 15-minute low being swept after this candle. So we're not entering a trade within this 15-minute candle right over here. We're not entering a trade inside of this candle. No, quite the opposite. We're waiting for that candlestick low to be swept. Now that happens in the 945 candle. This is where we're looking for the long entries. Okay, so let's rewind the chart and see exactly what plays out here. On the on the 1 minute time frame, we're waiting for the sweep of that candlestick low right over here. All right, so tapping into the 8 a.m. lows, tapping into the key level. Now we're waiting for that 15-minute CRT low. Okay, bearish fair value gap here being respected. And now we're gonna push prices lower once again. Bank, we finally tap into that 15-minute CRT low. What do you notice here? Insanely small fair value gap that formed right over here. This, if we inverse this, is going to be the FVG to enter long from. So let's just drag this out and see what happens next. Price immediately closes above that, and we also get the closure right at the order block high. This would be the entry to go long. Now we take that entry to go long right over here at the validation of both the order block and the FVG once again. Not just one, but both the order block and the FVG need to form for us to consider the entry to actually go long. Then you target the 8 a.m. highs. This gives you a nice 2.64 R to R trade. Is there any buy side liquidity above that price? Not really, right? The only buy side liquidity remains to be the Tuesday high right over here, so previous day high. So yes, you could extend your profits to Tuesday's highs, which is fine. We'll do that in this scenario here, but you could have also taken full TPs at the 8 a.m. highs right there. Now let's leave it at that for a 112-point move there, about a 112-point move. This is the entry. Let's see what plays out. Remember, key level being hit, 8 a.m. lows being swept, 15-minute CRT low being swept, FVG formed, order block formed. Let's see what happens. And just like that, final TP would have been hit 3 days in a row using the same exact concepts for 112.75 points on the Nasdaq. Are you guys starting to understand how powerful this strategy is? I should not even be sharing this for free. My TSR Premium members get this information, but I'm giving it to you guys for absolutely free. All right, TP1, of course, where is that going to be? The midpoint of the entire range. All right, so that would be right over here, the midpoint of the range. And then TP2 would be the midpoint of the 8 a.m. range, high and low, which is this low, this high to this low, the midpoint being right at this level over here, TP2. And then TP3 would be the 8 a.m. highs, and final TP would be buy side liquidity, which was Tuesday's highs in this scenario. That's the Wednesday, 3 days in a row, final TP. Let's see, not 3 days in a row, final TP. 3 days, we took TPs on all 3 days. 1 day was a break even, but we hit TP2 for about 100 points. So regardless, every single day so far this week was a 100-point move. Now let's take a look at the Thursday, all right? Hopping back onto the 1 hour time frame, we're going to locate the the 8 a.m. 1 hour high and low, or the 9 a.m. high and low, okay? In this case, we have the 8 a.m. highs right over here and the 8 a.m. lows. Now, is there any key level above price over here? The only key level is this high right over here, which was actually Wednesday's highs. So this is a 1 hour swing high. We're gonna mark this out as a key level. Do we have any key levels beneath price? Not that I know of, but there's only this swing low right over here, which was only tapped into at 11 a.m. Besides that, we don't have any gaps opening up. We have absolutely nothing opening up. So we're actually gonna wait for a sweep of the highs to then target the lows. Let's see what happens on the 15-minute time frame here. On the 15-minute time frame, we need a 15-minute CRT, as we spoke about before. But we also need to tap into this key level. So let's see what happens there. We're gonna remove that key level to the downside. Finally, we actually tap that key level with the 945 candle. We sweep this 15-minute candlestick high, which is very important, and we have this 15-minute candlestick low as well. Let's jump down to the 1 minute time frame and see what actually happens. Before we do that, let's not cheat ourselves, and let's actually rewind the chart to the 15-minute candlestick high and low here before the key level was actually hit, as you guys can see. Now let's drop down to the 1 minute time frame and see what happens next. We want to sweep that 15-minute candlestick high while tapping into the key level, and of course, while sweeping these 8 a.m. highs to then target the 8 a.m. lows. Let's see exactly what happens here if we catch an entry. Finally, we tap into that high. However, we need an FVG to catch this entry short. Do we get that IFVG? Indeed we do. However, the R to R on this, if we were to enter this trade, is absolutely awful. Something to point out, we also did form this order block right over there. So order block formed, IFVG formed, entry to go short is valid. However, the R to R to target those ADM lows are not, because the swing high is the stop loss. This would give you below a 1R trade. So that's absolutely god awful. Let's see if we drag this up to a 2R, if we actually get tapped into this, which would be right over, so just around here, about 1.99, so about a 2R trade. Let's see if we actually get tapped into that before the opposing end is ever hit. We don't get tapped into it. Nope. Price ends up expanding to the 15-minute lows. So still not at the ADM lows yet. Let's see if we get tapped into this trade. Finally, we actually get tapped into the trade for a 2R trade, right? So now TP1, where is it going to go? We have the midpoint of this entire range, right over here. TP1 would be right over here. So this would be TP1. And then TP2, where is it going to go? Guys, you know this by now. The midpoint of the entire ADM range, which is right about there. And then final TPs is going to go to the opposing end. Let's see if we get final TP here. And just like that, final TP was hit. Again, this is happening every single day. You have never realized this up until now, okay? This was a 70.25 point move. I can't even speak right now because this should be blowing your fucking minds, okay? Again, 1, 2, 3, 4 days in a row. Monday, Tuesday, Wednesday, Thursday. This literally happened not the past week, but the week prior. Every single day we got this set up. And I called this out live on stream, okay? Now, let's go ahead and take a look at the next example. I don't want to bore you guys too much. I know I'm repeating myself, but let's go ahead and take a look at this. So on the Friday, let's see if we got that set up. That was the Wednesday, that was the Thursday, and now on the Friday, we're looking for the ADM high and low. ADM high and low, where is that? Right over here. We got the ADM highs. And we've got the ADM lows. What do you notice, guys? I'm just gonna rewind this right over here. ADM high, ADM low. Right beneath that ADM candle is an hourly fair value gap. Right over there. That is going to be the key level. Is there any key level above price? The only key level remains to be this hourly swing high right over here. Again, why is this an hourly swing high? We have a lower high to the left and a lower high to the right. This is a swing high. Now, the idea remains simple. Sweep beneath or above the ADM range, tapping into a key level to then target the opposing end. Jump to a 15-minute time frame to validate a 15-minute CRT anticipation, okay? Let's see what happens next. Key level being tapped into over here. We actually tap into the highs, but we fail to tap into a key level, so you cannot go short there. We're gonna drop down to a 1-minute time frame here. What do you notice? We tap into that key level right there, all right? So the key level was actually hit with the 930 candle. Did we get any IFVGs while tapping into that candle? Let's take a look. We do not. There's no IFVGs in this range here, so you cannot enter longs. And then there was shorts that played out here at 937. And then finally, we're back into this range. However, jumping back to a 15-minute time frame, we need a 15-minute CRT. So we cannot enter this trade just yet. We have the 15-minute highs, 15-minute lows. We need to see if we get a sweep of that range, right? We're inside of the hourly key level. Let's see what happens here. And we also have some equal lows right over there. Let's see what happens. So price actually forms an IFVG right over here. However, what do you notice? No 15-minute CRT low being swept. Do we have a 5-minute CRT? No 5-minute CRT either, guys. So this, even if it works out, is not an entry. Let's see what happens. Price ends up playing out, moving towards final TP, however, no entry. So the only day of the week where you would have not caught a trade was Friday. And by then, you would have made so much fucking money that you would not even care to place trades on Friday. All right. Now, that being said, some of you guys are probably wondering, how can I trade this every single day? There's one prop firm that offers the cheapest accounts that I have found on the internet. It's called Blue Guardian Futures. They also have a Forex firm, which is called Blue Guardian Forex. You can go search those up. My links are in the description if you want to go hit them up. 60% off if you use code TSR. Yes, 60% off all the accounts. You can get accounts as low as $25, guys. Unheard of in this industry. No activation fees either. It's not Top Step where you're going to need to pay about $170 to activate your account. No, there's no activation fees. You pay $25 or $50, whatever account size you want. They even offer instant funding. If you guys are fed up about passing accounts and your stupid evaluation phases, you can buy an instant funded account and start requesting payouts in the first week. All right, guys. And now that you know this model, you can start making money like that. Take care, everyone. I'll catch you all soon.